All right, guys, RJ here from Steady Trades. Another quick educational vid. This one's going to be around the anatomy of a candlestick, right? Very basic stuff, but we need to know it. I think most people make this a little more difficult than it has to be. So let's see if I can kind of clear things up for you, and maybe make things a little bit clearer for you in terms of how you view a candlestick per se. All right, so every candlestick most candlesticks will have a wick and what we call a body, right? And the body is going to be the shaded box that you see, whether it be green or red. It's just going to be the shaded area, right? And so each one of these candles is a representation of price per that time frame. So let's say, for instance, we're on a 5-minute time frame. Then each one of these candles in this chart would represent 5 minutes worth of data, right? So with that being said, and with that already in the back of our minds, every single candle is going to have a high, a close, an open, a low. And then conversely, for the red candles, you'll see it inverse. So high, open, close, and low. So what does this mean? Okay, so on a green candle, this would mean that the price opened down here, right? Let's say it opened at, for the sake of this video, we'll say it opened at $5 and then pushed up to here and closed after 5 minutes, and it closed at $6. That's why this candle would be green, because it closed at a higher price than it opened, right? And then, the opposite for the red candles, right? So we opened at $5 up here, and then we pushed down, and we closed at $4 down here. And for that reason, this candlestick will be shaded red, which just means you dropped in price, right? If it closes higher than it opened, which means price increased, you're going to have a green candle. So what do the wicks mean? The wicks just simply mean during this 5-minute candle, price pushed to this point at one time or another, and then conversely to the low side, price pushed down to this point during this 5-minute time span, right? So that's all the wicks represent. Nothing to get too nervous about or anything, but let me show you guys what this looks like on a real chart. All right, so here we have a trading view chart, and I have the time frame set to 5 minutes, right? So what that means is that each one of these candles that you see on the chart is representation of 5 minutes worth of price, right? It is a direct representation of 5 minutes of price. And so if we look at this and the way the price action flows, we see this green candle push up, right? It's green. It closes. This next candle opens up. Price tries to come down. There's the wick you see. Then price pushes up and closes up here. Price moves over to this candle for the next 5-minute period, pushes down. Next one over, tries to regain some bullish momentum, rejects, and then pushes right back down and closes red. And if you guys look up in the top left corner up here, actually kind of middle of the screen, you're going to see these numbers, and you're going to see open, right? O for open, H for high, L for low, and C for close. And so if you hover over any one of these candles and then look up there, you'll see open was at 394.21 and the close was at 395.34. And for that reason, this candle is green, right? Conversely, for the red one over here, you'll see the open at 394.96 and the close at 393.57. All right, very simple stuff. Don't complicate it, guys. But if you need some help, if you have any questions or anything of that nature around candlesticks or charts in general, just feel free to reach out to us and we'll be glad to help.